Welcome to the deep dive. Today, we're plunging into a company that, well, really exemplifies the high-stakes world of biotech investment, Annovis Bio, Inc.
hmm
This isn't just another stock, it's a company presenting what feels like a genuinely binary bet, either a multi-billion-dollar breakthrough, transforming treatment for devastating neurodegenerative diseases, or, frankly, a clinical stage breakdown.
Right? High stakes indeed.
And we're here today to lay out exactly why it's such a high-risk, high-reward opportunity for you. Our deep dive today is based on a really comprehensive analysis of Annovis Bio Inc., traded on the NYSE as ANVS. It's a late-stage clinical drug platform company.
And just so you know, all the data we're sharing is current as of June 27, 2025. The closing share price then was $2.92. And our mission, well, it's pretty straightforward: dissect the science, the financials, and crucially, the inherent risks tied to Annovis Bio.
Using only insights from our source material.
Exactly. The goal is to give you, our listener, a kind of shortcut to being really well informed on this. Fascinating and, as you'll definitely see, highly volatile company.
Okay, let's jump right in. We need to understand the core of Annovis Bio first. Chapter 1, Business and Scientific Analysis. So Annovis Bio operates as a pre-revenue clinical stage biopharmaceutical company. Its business model is pretty characteristic of the whole biotech sector, right?
Absolutely. High risk, high reward. They're laser focused on R&D, research and development.
With the end goal being regulatory approval and then, hopefully commercialization.
Precisely. And because of that focus, the company currently generates, well, zero revenue from product sales. Nothing.
Wow.
And it has a long history of operating losses, funded almost entirely by issuing equity, selling stock.
So its valuation is completely tied to, what, clinical trial results?
Clinical trial outcomes and market sentiment. Forget traditional financial metrics you might look for in, say, a mature company. They just don't apply here.
Got it. And the entire future of Annovis Bio, at least for now, it really hinges on one key asset.
Yes, its lead drug candidate, Buntanetap. You might have heard it called Posifen or ANVS 401 before.
Okay, Buntanetap. And it's for diseases like Alzheimer's and Parkinson's.
That's right, chronic neurodegenerative diseases. It's an orally administered small molecule. They do have secondary programs, ANVS 405 and ANVS 301, but they're much less developed.
So Buntanetap is really the company's make-or-break asset. They're all in.
Totally all in. And it's crucial to understand the scale here. Annovis Bio is tiny, a microcap biotech firm.
Classified by the SEC as a smaller reporting company.
And an emerging growth company, yeah. Market cap around $56.9 million as of our analysis date.
Which makes it super susceptible to stock price swings, I imagine.
Highly susceptible. Clinical news, funding issues, just general biotech market mood.
Yeah.
It all hits hard.
Okay, now this is where I think it gets really interesting. Buntanetap's unique mechanism of action, the MOA. Can you break down why this drug is different?
Absolutely. This is key. So unlike a lot of competitors that target maybe one specific neurotoxic protein, like amyloid beta,
Right.
Buntanetap is what's called a translational inhibitor. Think of it like a master switch,
A master switch.
designed to simultaneously stop the synthesis, the production of multiple key neurotoxic proteins. We're talking amyloid beta, tau, alpha-synuclein, and TDP-43, all implicated in various neurodegenerative diseases.
Wow. Okay, so not just one target, but several.
Exactly. And this multi-pronged approach is really Annovis's core value proposition. It's what makes them different.
So the scientific thinking is, by tackling multiple problems at once, it could have a broader, maybe more fundamental impact.
That's the hypothesis. You see, in diseased nerve cells, you get this overproduction of these toxic proteins, and that disrupts critical functions, especially something called axonal transport. People call it the information highway of the brain.
Right, I've heard that analogy.
Well, this disruption leads to inflammation, and eventually the nerve cells die. So by inhibiting the production of these proteins, right at the source, the mRNA translation stage.
Before they even get made properly.
Yes, exactly. Annovis believes Buntanetap can restore cellular balance, improve that axonal transport, reduce the neuroinflammation, and potentially halt or maybe even reverse the neurodegeneration.
If that works,
Yeah.
wow, that would be game-changing.
It would absolutely redefine treatment. But it's a big if.
Okay, let's zoom out to the broader industry. Annovis is playing in a truly vast and expanding market for these neurodegenerative disease therapies.
Huge. Valued at over $50 billion in 2025.
And projected to grow at a KGR of about 7%.
Roughly, yeah.
Yeah.
Through the early 2030s. The main driver is simply the aging global population.
People living longer, unfortunately, means more age-related diseases like Alzheimer's and Parkinson's.
Precisely. Alzheimer's prevalence in the U.S. alone, projected to double by 2060. The need is immense.
So what are the key trends in this space?
Well, there's a big shift towards what they call disease-modifying therapies, or DMTs, trying to hit the underlying disease, not just mask symptoms.
Makes sense.
Also, a growing emphasis on personalized medicine, using biomarkers to figure out which patients might respond best. And just a surge in R&D investment everywhere.
Now, the competition, you called it a field of giants and ghosts. That sounds intimidating.
It is. You got the huge, well-funded players, Biogen, Eli Lilly, Roche, plus lots of smaller firms trying to make a mark.
Can you quickly compare Annovis to some of these key players? Put Buntanetap in context?
Sure. Look at Eli Lilly's donanemab. It showed significant slowing of cognitive decline, about 35% reduction. Great. But
There's always a but in biotech, isn't there?
often, yeah. Here it's safety concerns. ARIAE, that's brain swelling or bleeding in 24% of patients. And sadly,
Okay, what about Biogen, Aduhelm?
Aduhelm got that controversial accelerated approval based on reducing amyloid plaques. But its phase 3 results were conflicting, and it also had a substantial ARIAE risk, around 35%.
So safety is a major issue for these amyloid-targeting drugs.
It appears to be. And then there's the ghost of Samufalum from Cassava Sciences.
A cautionary tale.
Absolutely. Lots of initial excitement, but then it failed to meet its main goals in 2 big phase 3 trials. They discontinued the program in 2025.
And that probably makes the market nervous about other small biotechs.
You bet. It casts a long shadow. Now, compare that to Annovis. In its phase 23 trial, Buntanetap showed statistically significant cognitive improvements in early AD patients. And here's the kicker.
A safety.
A reported favorable safety profile. No drug-related serious adverse events, or SAEs, and crucially, no ARIA reported to date.
Okay, that's huge. That really highlights a potential safety niche for Buntanetap.
Exactly. Because its mechanism works upstream, preventing the protein overproduction, it might avoid those ARIA side effects plaguing the amyloid clearers.
If that holds up in phase 3, that's a massive potential advantage.
Potentially game-changing. But again, we need that phase 3 data.
And the regulatory path, especially for Alzheimer's, is tough, right?
Notoriously tough. The U.S. FDA pathway is long, incredibly expensive, and very high risk. Historically, only about 12% of drugs, even entering phase 3 for Alzheimer's, actually make it to pre-registration.
Just 12%. Wow.
Yeah. Although the FDA did show some flexibility with Aduhelm's accelerated approval pathway. So maybe a narrow precedent exists if Buntanetap shows really compelling biomarker effects. Still a long shot.
And the barriers to entry? Massive capital needed.
Extreme capital. Hundreds of millions just for phase 3 trials, plus deep scientific expertise navigating complex regulations, and you're fighting that exceptionally high clinical failure rate. It deters almost everyone.
So when we talk about a competitive moat, does Annovis have one?
Not in the traditional sense. No strong brand, no cost advantages, no network effects. Its entire competitive advantage rests on 2 things, both still unproven.
Okay, what are they?
First, it's intellectual property. The patents protecting Buntanetap, supposedly into the 2040s. That's critical if it works. Its unique capabilities. Basically, the differentiated science of Buntanetap itself. That multi-target mechanism and its potential for a much safer profile, avoiding ARIA. If that pans out, that's the real moat. More powerful than just patents.
So it all comes down to the science and the people executing it, which brings us nicely to Chapter 2, Management Evaluation. Annovis Bio is led by its founder, president, and CEO, Dr. Maria Maccecchini. She's a scientist, PhD in biochemistry.
And she has a track record, including a previous successful biotech exit back in 2001.
So a founder-led structure. That usually means a deep understanding of the science is guiding things?
Typically, yes. And they've significantly beefed up the team recently. Q2 2025 saw 4 new senior execs come on board.
Oh, really?
Who? Mark White is Chief Business Officer, Dr. Alexander Morin heading Strategic Communications, Hilda Maybach is SVP of Statistics, very important to trials, and Blake Jensen is Head of Quality.
That sounds like a strategic move, not just filling seats.
Exactly. It looks like a calculated effort to de-risk critical upcoming challenges, preparing for pivotal trials, maybe even commercialization down the line. Shows foresight.
And the team's ability to handle crises. They've been tested.
They have. First, that NYSE non-compliance notice in March 2025 for low market cap.
Scary stuff for a public company.
Definitely. But they developed a remediation plan, got it accepted, and secured an 18-month grace period, staved off immediate delisting.
Okay, good response. What else?
The Parkinson's disease trial, missing its primary endpoint. That was a blow.
Yeah.
But management pivoted. They focused the narrative on positive subgroup analyses, promising biomarker data, and kept talking to the FDA. Shows adaptability, making the best of a tough situation.
And how's their communication generally? Keeping investors informed.
Seems standard. Regular press releases, investor presentations, conference appearances, all the usual channels.
And they include those forward-looking disclaimers, I assume.
Oh, yeah. Appropriately cautious about the high risks involved. They have to be.
Now, capital allocation. How are they spending their money?
Singular focus. You could call it survival mode. Every available penny goes towards Buntanetap's clinical development.
We saw R&D expenses were like $20 million in 2024.
$20 million in FY24 and another $5 million just in Q1 2025. It's all about the trials.
So no M&A, not looking to buy other companies.
No, absolutely not. If anything, Annovis is the potential acquisition target if Buntanetap succeeds. The critical issue for them is the funding gap.
Right, you mentioned this. Cash running low.
As of March 34, 2025, they had $22.2 million. Management said that's only enough to get them into Q4 2025.
But the big Alzheimer's trial results aren't due until mid-2026 and mid-2027.
Exactly. There's a clear, significant funding gap they absolutely must bridge, likely through more equity financing. Dilution.
And obviously no dividends or share buybacks for a company burning cash like this.
No, all capital preserved for R&D.
So traditional metrics like return on invested capital, ROIC.
Meaningless. Deeply negative. The only financial metrics that matter here are the cash burn rate, how much cash they have left, and crucially, their ability to raise more money.
Okay, let's dive deeper into those numbers. Chapter 3, financial analysis. All right, let's run through the key metrics as of June 27, 2025. Market cap around $55–60 million. That's firmly in microcap territory.
Which, as we said, contributes to that high volatility. And just to hammer it home, pre-revenue, no sales.
So things like revenue growth, profit margins, gross, operating, net, they're either irrelevant or just deeply negative.
Completely irrelevant or negative. Their business model is a cost center right now, focused purely on R&D investment.
And they've consistently generated negative free cash flow for 5 years.
Yes, with substantial net losses, like that negative $24.59 million in 2024. And that trend isn't expected to change anytime soon.
Financial stability sounds precarious.
It is. Earnings consistently significantly negative, and those losses generally widen as the clinical programs get more advanced and more expensive.
Now, I saw a debt-to-equity ratio of 0.
Yeah.
That sounds good, right? No debt.
It sounds good, but it's a bit misleading. It masks the reality.
How so?
They finance their massive accumulated deficit over $140 million, not with debt, but through constantly issuing new shares. Equity.
Ah, the dilution we talked about?
Exactly. We saw shares outstanding jump from 14.1 million at the end of 2024 to 19.5 million just 1 quarter later, end of Q1 2025.
That's a big jump.
It is. And that's the fundamental trade-off for investors. Your slice of the pie keeps shrinking to keep the company afloat.
What about short-term liquidity? Their current ratio looked pretty strong.
Yeah, around 10.7 as of March 34th, 2025. That's $26.7 million in current assets versus only $2.5 million in liabilities.
But that's mainly due to that recent stock offering.
Entirely due to the $21 million public offering they did in February 2025.
Yeah.
So yes, strong now, but it's expected to decline rapidly because of that ongoing cash burn.
Got it. And just to confirm, no dividend.
No dividend.
Okay, so valuation. If traditional metrics like TE don't apply because earnings are negative, how on earth do you value a company like Annovis?
That's the million-dollar question, isn't it? And it really highlights the speculative nature here. Intrinsic valuation has to rely on a discounted cash flow or DCF analysis.
But how can you discount cash flows that don't exist yet?
You can't. Not really. It becomes highly speculative. You're not discounting existing cash flows. You're building a forecast of potential probability-adjusted future cash flows.
Probability adjusted.
Yes. Based on the chance the drug actually gets approved and commercialized. It's more a framework to understand the potential risk and reward than a precise valuation tool.
So you're basically trying to predict a very uncertain future and then discount it back heavily. What are the key assumptions in that kind of model?
You've hit it. The absolute most sensitive input is the probability of success, the POS.
Which you said is only about 12% baseline for phase 3 Alzheimer's drug.
Just 12% historically. Yeah. So even being generous, maybe you assign Buntanetap a 15% to 25% OS, reflecting its unique approach, but still acknowledging that huge hurdle.
Okay, what else?
Then you have to guesstimate peak sales projections. That involves estimating the market size, Buntanetap's potential share, the drug's price.
Right.
Lots of assumptions.
Right.
And the discount rate, your WACC, has to be very high to reflect the extreme risk. You factor in the risk-free rate, maybe around 4.25%, but then add a huge company-specific risk premium. Its beta is high too, 1.62.
And a terminal growth rate.
Keep it conservative, 0% to 2%.
So even if you build a credible model, the output range is going to be enormous, from basically 0 to who knows.
Exactly. Any DCF or Annovis will spit out a very wide range of potential values. Pessimistic case, maybe near current cash per share. Optimistic case, could be many, many multiples higher. The value is almost entirely dependent on that phase 3 trial outcome we don't know yet.
A true binary event.
Couldn't have said it better myself.
Okay, let's move on to the second part of our deep dive, Chapter 4, Market Sentiment. The market's view on Annovis Bio seems incredibly polarized. You look at analyst ratings and often see buy or strong buy on the surface.
Right, but you have to dig deeper. The really telling thing is the dispersion in price targets. It's exceptionally wide.
How wide?
We're talking forecasts from as low as $8.08 all the way up to over $75. Average targets range from $12.33 to $30.25. That signals a profound lack of consensus among the pros.
So they agree it's a buy, but can't agree on what it's worth. That's interesting.
It is. And you even see analysts doing things like lowering their price targets significantly. H.C. Wainwright went from $30 down to $12 while still keeping a buy rating.
What does that signal?
It suggests they still believe in the science, the long-term potential, but they're recalibrating for near-term risks, like maybe a lower perceived probability of success now, or longer timelines, or the impact of that inevitable dilutive financing.
And recent news reflects this mixed bag, too. Good news from clinical progress.
Yeah, initiating the AD trial, presenting promising biomarker data at that big Alzheimer's conference, that's positive.
But balanced by the negative news on the financial side.
Exactly. The NYSE noncompliance issue, the constant need for more capital, that definitely weighs on sentiment.
Okay, what about other market indicators? Short interest.
Very telling. It's significantly high, somewhere between 8.6% and 13.53% of the public float, depending on the source and date.
That's a lot of people betting against the stock.
It is. It shows deep market skepticism. Active bets that the price will fall, likely due to concerns about clinical failure or running out of money.
Now, technically speaking, price versus moving averages. I saw something interesting there.
Yes. The share price, $2.92 as of our analysis, was actually above its 50-day simple moving average, which was around $1.86 to $1.97.
Suggesting some recent positive momentum, a bounce.
Exactly. Short-term strength or hope. But
Oh, the other shoe.
in stark contrast, that same $2.92 price is significantly below its 200-day simple moving average, which was way up between $3.08 and $4.88.
Indicating a strong, persistent downtrend over the longer term.
Precisely. So the technical picture paints this battle. Short-term hope versus long-term pain. Creates huge volatility, lots of people betting that recent rally won't last and the downtrend will win out.
A real tug of war. Okay, let's see who's actually holding on to the rope. Chapter 5, Ownership Structure. The ownership structure here seems to tell a story, too. Strong insider conviction versus maybe broader institutional skepticism.
That sums it up well. Institutional ownership is relatively low, around 10% to 13%.
And who are those institutions?
Mostly passive index funds, like the Vanguard Group. Their positions are often just because ANVS is part of some broad market index they track.
So not active bets on the company, necessarily?
Largely not. What's really conspicuous is the absence of large, fundamental-focused healthcare investment funds, the big specialist funds.
Suggesting they find it too speculative.
That's the likely interpretation. Too speculative for their mandates, which often involve managing risk more conservatively.
Okay, but in sharp contrast to that low institutional interest, insider ownership is high.
Remarkably high, between 14.45% and 15.45%. That shows significant skin in the game, from the management team and the board members.
They believe in it enough to hold a big chunk themselves.
They do. And what's even more compelling is the recent insider transaction activity.
Buying or selling.
Unequivocally bullish. Over the last 12 months, 5 open market buy transactions by insiders and 0 open market sells.
Wow, 0 sells. Who is buying?
They bought over 78,500 shares combined. Purchases included the CEO, Dr. Maria Maccecchini, and Director Michael Hoffman.
That's a very strong signal. People with the most information are putting their own money in.
It's one of the strongest positive signals you can look for in any stock, especially a speculative one like this. Consistent, confident buying from the inside.
So with high insider ownership and low institutional participation, ownership is fairly concentrated.
Yes, which leads to a relatively small public float, the shares available for public trading, around 16.6 million shares.
And a small float can contribute to.
You guessed it, high volatility. Fewer shares trading means news or buying-selling pressure can move the price more dramatically.
Makes sense. Okay, now for perhaps the most crucial part for anyone considering this stock. Chapter 6, risk assessment. So investing in Annovis Bio. It's clearly subject to a whole range of factors, internal and external, creating both big opportunities and, well, significant threats. But it really feels like the entire investment thesis just boils down to one single, massive, overarching binary risk.
Absolutely. The success or failure of that pivotal phase 3 trial for Buntanetap and Alzheimer's disease. Everything hinges on that. If it succeeds, the strengths get amplified. If it fails, the weaknesses become fatal.
Okay, let's break it down using a SWOT framework. Strengths first.
Okay, strengths. Unique science that multi-target MOA for Buntanetap, promising early data signals in AD, showing those statistically significant cognitive improvements. Experienced and invested leadership, founder-led, those new strategic hires, and that high insider ownership we just discussed. And critically, that clean safety profile reported so far, no RIA.
All right, pretty compelling strengths if the science works out. Now the weaknesses.
This is where it gets tough. Single asset dependency, everything rides on Buntanetap. Precarious financial health. History of losses, negative cash flow, that going concern warning from the auditor, total reliance on dilutive equity financing.
And the clinical setbacks.
Right. Disappointing PD trial results missing the primary endpoint, and that ongoing NYSE non-compliance issue over minimum market cap, the delisting threat. Those are significant weaknesses.
Okay. What about the opportunities? Why take the risk?
The opportunities are potentially enormous. First, the massive unmet medical need in AD and PD, a multi-billion-dollar market potential if they succeed.
Huge potential market share.
Second, that potential for best-in-class safety. If Buntanetap proves effective and maintains that clean safety profile, avoiding ARA, it could carve out a huge safety niche compared to competitors.
A major differentiator.
Absolutely. And third, if that phase 3 AD data comes back positive, Annovis instantly becomes a prime partnership or even acquisition target for a big pharma company looking to get into the space.
That's the multi-billion-dollar exit scenario. Now, the threats.
Intense competition from those large, well-resourced pharmaceutical companies is a constant threat. But the single greatest threat is simply clinical and regulatory failure.
Given that dismal 12% success rate in phase 3 AD trials.
Exactly. The odds are historically stacked against them. Failure there is the existential threat. And then you have macroeconomic factors layered on top.
How do macro factors play in? Interest rates, inflation.
They act as a risk multiplier. High interest rates and inflation tighten up capital markets, especially for cash-burning biotechs. It makes it harder and more expensive for Annovis to raise the funds they desperately need.
Increasing the risk of more dilution, or maybe even failing to get funding at all.
Precisely. Plus, you have things like the Inflation Reduction Act, the IRA, which could put downward pressure on future drug prices, potentially shrinking the eventual reward even if they succeed.
And any specific geopolitical risks. Supply chain.
Yeah, that's a factor too. Potential tariffs on active pharmaceutical ingredients, the APIs, coming from places like China or India, that could disrupt Buntanetap's supply chain.
Leading to higher manufacturing costs, maybe delays or even shortages.
It's a possibility. Another risk factor to consider in the complex web.
Okay, quite the minefield. Let's try to bring all these threads together. Chapter 7, conclusion. So, our deep dive into Annovis Bio, Inc. paints a picture of a company truly at a critical inflection point. There are really compelling arguments for both, well, extreme optimism and profound pessimism.
Absolutely. Let's synthesize the bullish points one last time. Buntanetap's differentiated science, that multi-target approach, its potential for a best-in-class safety profile, crucially lacking the ARI seen in competitors, those promising clinical signals we saw in early AD patients, strong insider conviction, shown by that consistent buying, and of course the massive market opportunity in neurodegeneration.
A powerful bull case if the drug works safely, but you absolutely have to counter that with the bearish points.
Definitely. The extreme clinical risk. It's a single drug, it already failed a primary endpoint in PD, and the historical odds in phase 3 AD are just brutal. And there's the precarious financial position. Cash burning. that going concern warning, constant need for diluted financing, the delisting threat hanging over them, formidable competition from giants, and that negative market sentiment evidenced by the high short interest.
A very heavy bear case focused on execution and financial risk.
And to reiterate the valuation summary, forget traditional metrics. A probability-adjusted DCF is the framework, but it's highly speculative.
Yielding that incredibly wide range of potential values.
Exactly. The value is like a probability distribution that's going to collapse either upwards or downwards dramatically when that pivotal phase 3 data finally reads out.
So our concluding outlook is this. Annovis Bio is really the epitome of a high-risk, high-reward, speculative biotechnology investment. Its current share price, around $2.92, seems to appropriately discount the significant risks, clinical, financial, regulatory. This is an investment in a stable business with predictable earnings. It's much more like a venture capital-style bet on a binary clinical outcome. Pure speculation, essentially.
That sums it up. The path forward for Annovis is undoubtedly perilous. Failure is a distinct possibility, maybe even the statistically likely outcome, but the potential reward is transformative.
Delivering a safe and effective treatment for Alzheimer's or Parkinson's, that changes everything.
It changes everything. So the investment decision really hinges entirely on your assessment as the listener of the probability that Buntanetap's unique science can actually pull it off. Can it triumph where so many others have failed? And maybe a final thought to leave you with.
Yeah.
What is Annovis Bio's story, this whole high-wire act? Tell us about the future of drug development for these incredibly complex diseases. And how do you personally weigh that immense societal need against these extraordinary financial and scientific risks?
Definitely something to think about. Please like and subscribe to Stock Analytics AI. Remember, for just $4.99 a month, members get priority deep dives on tickers you request. And over the next few months, we're tackling all of the S&P 500 stocks, with members getting exclusive priority access.
And if you just want a one-off deep dive on a specific company, you can always drop us a super thanks.
We appreciate the support.
And now for the crucial disclaimer. This analysis was generated by an AI system purely for educational purposes. It should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.